Welcome back. Breaking this morning, China says it will impose an 84% tariff on U.S. goods, another retaliation move in response to President Trump's reciprocal tariffs. Those tariffs took effect last night at midnight, including the 104% tariff on China. Joining me now is U.S. Treasury Secretary Scott Bessent. Mr. Secretary, thanks so much for joining me this morning.
Morning, Maria.
Well, I want to start right there. Give us your reaction to more escalation coming out of China, taking their tariffs up to 84% on top of President Trump's retaliatory tariffs.
Well, Maria, I think it's unfortunate that the Chinese actually don't want to come and negotiate because they are the worst offenders in the international trading system. They have the most imbalanced economy in the history of the modern world. And I can tell you that this escalation is a loser for them, that they have some very smart, the economists, the academicians, technocrats within their bureaucracy, and they would be telling the leadership that we do not have the edge here. They are the surplus country, that their exports to the U.S. are 5 times our exports to China. So they can raise their tariffs, but so what?
So let's talk about this for a second, because I wonder, I agree with you. I mean, I think that China needs the United States so much more than the U.S. needs China. But the economies are so connected, Secretary. We're buying all this cheap stuff. People expect things to be cheap, and we know it's because they're made in China. And it feels like a soft war right now with China. Are there any areas or opportunities to give companies the time to move those supply chains to America so that we don't have to rely so much on China? This can't happen overnight, right? Even though China is the enemy, the #1 adversary, and we are in this soft war and they're escalating this right now, are the near-term effects such that the U.S. gets impacted negatively first?
Well, again, Maria, no one wins in a war, but it's proportionality, and the proportionality for the Chinese is going to be much worse. And the other thing too is, Maria, what would be a very good step with the Chinese would be acknowledging that the precursor chemicals for fentanyl come from China. They make their way into North America and then are sold into the U.S. We have more than 100,000 American citizens dying every year. And so China, a very good start would be for them to make a gesture on the precursor fentanyls, because, distributing drugs in China is punishable by death. Why don't they apply the same standards to the people who are exporting these chemicals to the U.S.?
Yeah. Well, it's true, and that's where this all started. President Trump said that he was putting tariffs in place on China as a result of their failure to stop the fentanyl flow. But now people are wondering, is that still the reason to put tariffs on China? Is it to raise revenue? Is it to get supply chains into America? Is it to answer, the fentanyl problem? People, business leaders are saying to me, why are we doing this? Everyone was very excited about President Trump's agenda, deregulation, tapping into energy, tax cuts, and now, boom, with these tariffs, everything has changed. Why are we doing this?
Well, Maria, I think it's, as you said in the last segment, it's all of the above. President Trump was elected with a mandate. He's closed the border, so check on that. We are doing the very large deportation of people, criminals, and people who have overstayed their visits, their period. So we're in the midst of that. And now President Trump is tackling the trade agenda. And this isn't done in isolation, Maria. As you just interviewed Senator Hagerty, we're running the parallel processes here. So there's tariff, there's tax.
Yeah.
Tax is going extremely well. That the Speaker Johnson, Leader Thune, from the leadership of people like Senator Hagerty, Jason Smith, Senator Crapo, I can tell you that that's going very well.
Yeah.
So at a point, in the not too distant future, I think we will be back to firing on all cylinders. We have the response to the countries who want to come and sit at the table rather than escalate has been overwhelming.
Yeah.
You know, our allies, Japan, South Korea, India, and I will note that they are all around China. We have Vietnam coming today.
Yeah.
So everyone is coming to the table, and basically China's surrounded. The other thing
That's a very good point.
The other thing that I would note is that a Spanish official said today that maybe Europe should look to China instead of the U.S. And I can tell you that is a losing proposition for the Europeans, because what is going to happen, and we've already seen it starting last week, that as we put up the tariff wall, China's business model is predicated on this incredibly imbalanced economy and exporting low-cost goods and subsidized goods to the rest of the world. And guess where they are going to land? On the European shores. So our allies, part of our discussion, as our allies come in and talk to us, is how do we get China to rebalance? That is the big win here. Yeah. That the U.S. is trying to rebalance toward more manufacturing. China needs to rebalance towards more consumption. If at a point we can move to that, then we can move together. Yeah. If they will acknowledge this fentanyl problem, so we have to have an end to these mercantilist policies. President Trump made that a priority.
That's right.
Just as tax is a priority.
Well, this is all really important points, and I want to get to tax in a second. But in terms of the message, you just sent a great message to the Europeans. Let's hope they get it. In terms of the Chinese economy right now, you have to believe that 104% tariff on Chinese goods coming in is going to have a huge impact on the Chinese economy. How would you assess the Chinese economy right now?
Well, look, they were in a recession/depression due to a real estate collapse that had a real estate bubble that is deflating. That had been going on for years, and the economy was in terrible shape. So again, they're going to go from bad to terrible. And that which is unsustainable will be unsustainable. Yeah. The other thing that the Chinese should not do is try to devalue their way out of this, because back to our European friends, our Japanese allies, our Korean allies, the Vietnamese, if China starts devaluing, then that is a tax on the rest of the world, and everyone will have to keep raising their tariffs to offset the devaluation. Yeah. So I would urge them not to do that and to come to the table. So, I mean,
one more question on China, then I want to get to your talks on the tax extensions. How far are you willing to take this in terms of this soft war with China? We've got Chinese stocks trading on U.S. exchanges. U.S. investors are buying those stocks, and that's helping China fund its military. Let's face it. Are you willing to go that far to remove Chinese stocks from U.S. exchanges?
Maria, I think everything's on the table. We are putting in process export controls for high-value security-related goods. We are talking about the export capital controls in terms of, as you said, a blacklist of things that U.S. Whether pension funds, endowments, investors should not be investing in to fund the Chinese military machine. So, but that'll be President Trump's decision. And you know what, Maria, at the end of the day, President Trump, Chairman Xi have a very good personal relationship, and I am confident that this will be resolved at the highest levels.
Okay. The president obviously is trying to build consensus on the tax cut extensions. The president met with House Republican holdouts yesterday. They're stalling the Senate budget bill over tax and spending cuts. Fox has told Trump moved some potential no votes to yes votes. You've been meeting on Capitol Hill now for weeks, but House Freedom Caucus Chairman Andy Harris now says he's open to the creation of a 40% tax bracket for those earning $1 million or more. So, Mr. Secretary, are you planning on keeping taxes high, raising taxes for the rich in order to get the tax cuts like no tax on tips through?
Maria, the negotiations are moving along quickly. I don't want to talk about anything that's in the bill. That it's crazy to negotiate and they talk about specific things in a public forum. But I will tell you that the progress has been substantial, and I want to compliment the Speaker Johnson, Leader Thune, Senator Crapo, and the Chairman Smith. Just so you know, the House has been working on their bill for almost a year, and in anticipation that we would be here. Leader Thune and Senator Crapo are moving this through the Senate very quickly, and with President Trump's leadership, President Trump is now weighing in with his preferred policies, and as you know, he is remarkably persuasive, especially when he speaks to Republican congressmen.
And I know that you're meeting with the Republican Study Committee today. What will be victory for you in the coming couple of weeks? Before we know that a bill is headed to the president's desk by the end of May, which is what Mike Johnson wants, what do you want to hear? That you have the votes in the Senate, that you have the votes in the House to actually get a bill, including the tax extensions, done?
That's exactly it, Maria, that we are moving in unison toward getting the bill done as quickly as possible. And Maria, don't forget that within reconciliation, we are going to have the debt ceiling. That is something that is playing in the background.
Yeah.
So we are going to do debt ceiling through reconciliation, the so-called X date, when the government runs out of money.
Yep.
We will never hit that. But if we don't get something done in June, we will go on the warning track. And as every baseball player knows, you don't want to be looking over your shoulder and hit the wall.
Yeah. Secretary, what is the backup plan in the meantime? Because, I understand the long-term issues, and I certainly understand this as a national security issue. 100%. I get that. And what the president is doing is monumental. No president has taken this on before. So we recognize the massive issues here. However, in the meantime, you're talking about $6 trillion in market value loss in a week. You're talking about CEOs now unwilling to give guidance for 2025. Is there a response or a backup plan for what seems to be corporate America shutting down corporate activity? IPOs put on the shelf, M&A deals put on the shelf, CEOs not giving guidance. I spoke with one CEO last night. He said, we're cutting our capital expense budget. I'm cutting my travel budget. I'm doing everything I can in terms of cutting so I don't have to cut jobs yet. But that is, of course, on the horizon because we're cutting capital spending. What do you do in that regard in the coming weeks and months as we see more CEOs talk that way?
Well, I think in the coming months, CEOs won't have to talk that way. And what can we do in the coming weeks is, we have opened this process of negotiations country by country. It's going to be a bespoke, tailored process for each country. And as we strike these trade deals, I think that we will see greater and greater certainty. We have a delegation from Vietnam in. I was at the ambassador's residence, the Japanese ambassador's residence here in D.C. for the Cherry Blossom Festival last night, which was fantastic. And a Japanese delegation will be coming soon, South Korea, India, the UK. So I think we are going to see a rapid succession of these deals that will give CEOs greater certainty. But I think nothing gives greater certainty than getting this tax bill done.
So what are the metrics and the milestones that we should be looking at, that the market should be looking at to feel confident that this is working? You just named a number of countries. Is that what you want? Do you want to see 3, 5 new deals in the coming months in order to feel like, okay, we're getting somewhere?
Well, that will be on trade, and then we talked about tax, and then Maria, I wanted to address in the meantime there is one of these. I've seen it very often in my market career. There's one of these deleveraging convulsions that's going on right now in the markets, and I think it's in the fixed income market. There's some very large leverage players who are experiencing losses that are having to deleverage. I believe that there is nothing systemic about this. I think that it is an uncomfortable but normal deleveraging that's going on in the bond market. And I expect that as we see the leverage come down, the risk managers tapping people on the shoulders, telling them to bring their books down, which is what happens every couple of years as leverage builds up, then the market will calm down. The other thing I can tell you is I'm giving a speech this morning at the American Bankers Association, and we're going to be talking about the substantial financial deregulation that's pushing forward. And Maria, if we think about President Trump's agenda, tariffs came first. Now we're going to get tax done. We are pushing for deregulation, and the deregulation, unfortunately, takes longer to kick in, but I tell you, when it does, it's going to be powerful. And part of the deregulation in the banking industry will be the changing what's called the supplementary leverage ratio, which will allow banks to buy more treasuries without a big capital charge. So, I would expect that we have created a new buyer for Treasury securities, or a larger, more durable buyer.
The fixed income issue has been a debacle this morning, and that is why I assume rates are moving up. The yield on the 10-year. We were wondering if there was a deleveraging issue, and whether or not China is dumping treasuries. Is that what you see right now? Is China dumping treasuries to try to put pressure on this market?
Maria, I think it works against their purposes if they are dumping treasuries, because if they're dumping treasuries, then they have to buy something else. If they sell dollars, then they strengthen their currency. And as I said earlier, they've actually been weakening their currency, which is a loser for everyone.
Right.
And again, when I hear all these stories, that the dollar is no longer going to be the reserve currency. If you end up with the Chinese who are willing to use their currency as a trade tool, that doesn't seem like a very good reserve asset to me.
Yeah, very good point. But the dollar has been plummeting. You know that. What's the impact of that?
Well, again, I want to reiterate, the U.S. has a strong dollar policy, and part of it is the overall, some of the bilateral, the dollar versus the euro, the dollar versus the yen. The Europeans are going to spend more on defense. So we are seeing upgrades, finally, to European fiscal spending. And it was President Trump's pressure on NATO, on the military alliance, to say, pay your fair share.
Yeah.
And that will bump their economy. In Japan, the yen has been strong, but again, that is the result of very strong Japanese economic growth, rising inflation expectations, so the Bank of Japan is raising rates. So, all that's natural, Maria.
Secretary, I have one more final question for you, and I know that you gave a very thoughtful interview recently, and you talked about the fact that we've got millions of people still in poverty right now. You're about to give a speech. No doubt you're going to touch on the macro story, and increasingly people are expecting that we are headed for a recession. I spoke with one CEO over the weekend. He said we are already in a recession. So how do you deal with that as you are trying to implement all of these new policies like deregulation when you've got the market expecting a sharp slowdown in economic activity, sir?
Well, Maria, I think what the CEO may have alluded to, and I've said it in the past, that the manufacturing sector under the previous administration was in a recession. So what we are doing is what I call reprivatizing the economy. 80% of the job creation was either government jobs or government adjacent, which is education and healthcare. And this massive amount of government borrowing. So we are also getting the deficit under control, right-sizing the federal workforce, and then on the other side, they're going to re-lever the private sector through smart, safe, and sound bank deregulation. And then, as this CEO said, they can come out of recession because I expect that long-term interest rates should come down as we get the budget under control, inflation under control, energy prices come down, and then the private sector will have room to grow.
Yeah. Well, look, let's hope that this huge population of people that President Trump delivered in that election, which includes Republicans, Democrats, and independents, will wait this out and get to the other side. And not continue this loss of value. But, Secretary, we appreciate your leadership. Thanks very much for being here this morning.